Let's finish up the Pharrell problem. Remember, we said there were some steps we had to journalize, then we post to the ledger, do a trial balance, and then do financial statements. In the last video, we journalized all the transactions by date, so as they happen. So now we're going to finish up these last 3 steps. I type them into Excel, so the journal entries are a little bit prettier and they fit a little easier. I also put the reference there for which of the transactions we were matching up to. The next thing we have to do is we need to post things into the ledger. You've got a sheet here that just says ledger. To make this easy, in my lab, they've got the fancy ledger. That's the way it actually would look. But when we're just doing it by hand, we do these little T accounts. And we usually start with cash, and that's usually got the most stuff in it. So give yourself plenty of room. Debits go on this side because debits always go on the left. Credits go on that side. When we say post, all that means is that we have this journal entry where we debited cash for 76. So we're going to debit cash for 76,000. Because we often have a lot of entries, a lot of things going on, I usually give myself some way to know which it is. So that's why I made this an A. In real life, you'd say what page number it would be on. And the other half of that transaction was common stock. Usually you put all your assets together, all your liabilities together. So I'm going to think common stock maybe is over here. I'm going to abbreviate a little bit, whoops, and get down so you can see it. And so that is for 76,000, and that went on the credit side. That's the other half of A. So we know that these two go together because they're A. Our next one then is building and cash. I'm going to do the cash first. So that's a credit here. So that's 51,000 as a credit. That was entry B. And then I don't have an account yet for building, so I'm going to just slam one in here. And then I'd go down and do equipment and loan payable. I don't have a T account for either of those, so I'd have to add those. And you go through on each one and you post it. And I'm going to cheat a little bit. So you can pause if you want to go ahead and post everything. You'll have a page of stuff all filled with information. And you can kind of squeeze it in that top part. I already did it. So I did it in Excel again so that it looks a little bit neater. And notice cash has got all sorts of transactions in there because we had buying the building here. E was when we paid some rent expense and some advertising expense. And if I don't know what that is, I'd look through and I've got this and this and this and this. But the other half to ease over here in the expense accounts. I've got T accounts for every account. I'd expect the cash all to end up with a debit balance. So these number here is if I take the debits and subtract the credits, that's what I get. So that's what I mean by a cash has a normal debit balance. I'm hoping that's positive, so that needs to be on the debit side. Accounts receivable, 36 minus the 19s, where that 17 is coming from. Building, I only bought one building. Equipment, I only had one entry there. Supplies, I only had one entry there. So when you're done doing your T account, you put a line and then you put the total underneath to see what it is. I kept my assets in one spot. Liabilities are over here. So again, liabilities, you expect to see the ending balance to be a credit, and we do. And then your revenues should have a credit balance. You almost always are increasing your revenues. So almost always those are going to be credits. Same thing on expenses. Those are almost always debits. And I got cost of goods sold hiding down here at the bottom. Here we only had one entry to each one of the expense accounts, but salaries, if you paid twice a month, you'd have two of those or something. So that's what we mean by general ledger. And I'll write that up here, I guess. The difference between a journal is a journal, like your diary, goes in date order. A ledger goes in account order. It's got the same information. If you copied it correctly, everything should be hunky-dory. But if not, we'll find out before we go too far. So that's what we mean by general ledger. We got all this junk here, but we want to make sure before we proceed that we posted everything correctly so our debits still equal our credits. And that's what your trial balance does. All you're going to do on the trial balance is find all the ending balances and put the debits on the debit side, put the credits on the credit side, and make sure your debits equal your credits. So for cash, I'm going to put 24,150. So cash has a debit balance, where's my camera, of 24,150. Accounts receivable has a debit balance of 1,700. Inventory is my next one. And it has a balance of 400. It's kind of nice to put your assets together because you don't get on the wrong side as much. Your building is 51,000. Your equipment is 34,300. If you have this sitting next to you, it's a little, supplies are 200. And those are your assets. And then your liabilities probably will have credit balances. So that's why it's kind of nice to keep them together. So your liabilities, you have accounts payable of 100. I have some utilities payable of 700 and a loan payable of 34,300. So I have utilities payable of 34,300. And now you forgot what your loan payable was. Oh, this is my loan payable. No, I got off one. And this is my utilities payable. Were you yelling at me the whole time? So not very pretty, but we got it. Then the next thing we've got is some equity. We've got that common stock. Equity has a credit balance. So my common stock is 76. And now I'm ready for my revenues and my expenses. My revenues, something must be outside. I don't know if you hear the dogs barking. But the revenues are 5250. Remember, they would have a credit balance. So my revenues or my sales, whatever you want to call them, 5,250. Now they're starting to howl. And then comes your expenses. And this is where you sometimes screw up because the dogs are howling and because the expenses, remember, have debit balances. So this is 1,100, 500, 2,200 for the rent, the ad expense, the salaries expense. And you have to remember to go back to the debit side to be, what did I have here? 1,100, 500, 2,200, utilities expense of 700. And amazingly, I've got the sort of the right number of lines. Cost of goods sold is 100. All right. Assuming I have everything in here right, you want to just trust me here. This totals down to 116,350. And this one better come up to be the same. And if I wrote them all down right, they really do. If they don't balance, look at the number that doesn't work. Like if this doesn't end in a 50, I mean, you look down here and there's got to be a 50 here because you'll have 150 up there. So that's all the trial balance does. It lists everything in the general ledger. If you've done something wrong in your general ledger, you'll find it when you do your trial balance. If you posted it wrong, if you wrote it wrong in your trial balance, that just makes sure your debits equal your credits. That takes us to our financial statements. Let's talk about it a little bit. The first thing you always have to do is the income statement, because if you remember, your net income becomes part of retained earnings So if you don't know your income first, your balance sheet's not going to balance. So first you're going to do your revenues minus expenses to get to your net income. Sometimes you can do this as part of your balance sheet. Sometimes it's nice to do a separate little statement of retained earnings, where you're going to take your beginning balance plus your net income minus your dividends. Remember, that's where the earnings are paid out to get your ending retained earnings. And then you can do your balance sheet, and your balance sheet will balance. Usually we start with cash. We start with kind of the short stuff first, the more cash-like first, and go to longer things later. Then we do our liabilities and our stockholders' equity. That's what we're going to do for Pharrell. This is where our trial balance comes in handy. We're just going to take the numbers on the trial balance because we know our debits equal our credits. So if we do this right, we should still have debits equal credits. So we're going to start with our income statement. We want to start with our income statement. And a lot of people are kind of persnickety about how you set these up. For right now, we just want to get it to balance. So we start with our sales or our revenue, whichever you want to call it, which is this $5,250. And then we're going to subtract out our expenses. And then you just list your expenses. So we have rent expense of $1,100. We've got advertising expense of $500. We've got salaries expense of $2,200. We've got utilities expense. Utilities expense of $700. And cost of goods sold. And we'll learn we really put that someplace special a lot of times. For now, this is fine, of $100. So that's just all of these from the trial balance we've taken care of. So then we have total expenses of $4,600. And sometimes when we subtract things, we put them in parentheses. Again, remember, a negative sign is really hard to keep track of. And so if we put them in parentheses, that way we know we're subtracting things. And so our net income is $650. So that's how much we made this period. So since this is our first year and we don't have a beginning retained earnings and we didn't pay any dividends, we can move straight to the balance sheet. Got to remember, this then goes into that retained earnings account, which is a stockholders' equity account. All right. So on the balance sheet, we've got this income statement on this income on the income statement, but when we get to the balance sheet, that $650 shows up in retained earnings. So I'm going to start with my assets always. And sometimes you can keep going all the way down. And sometimes we put the assets here and the liabilities over here. And since I'm kind of running out of room, I'm going to do the 2-column way. So my assets, I have cash of $24,150. My accounts receivable of $1,700. I don't know if you can hear it, but my dog is still barking. Inventory, building, equipment, $34,300. Supplies, and later we'll make this prettier, but for now we just want to see if we can get this thing to balance. And then I go to accounts payable and I go, oops, that's a liability. So that's all the assets I've got. So let me double check, make sure I got everything. I should. If I total that down, I have $111,750. I think you actually have enough room to go straight down, but I'm going to do it over here just to kind of show you. So then I can move over to here if I want. Start with my liabilities. So my liabilities go over here. And I usually start with accounts payable and then again start with short-term stuff and then get longer. So my accounts payable is 100. I got that loan payable on the equipment. That's 34,300. I got utilities payable of 700. And then I got common stock, and common stock's equity, so I want to stop there. So this is what I want to total up, and that's my total liabilities. And often I kind of usually indent this a little bit, so I'm going to put this out in the margin. I've got 35,100 for my total liabilities. So next I do my equity. And so my equity was common stock, and that's 76,000. And this is where, you notice this other one, I've already taken the sales and the rent expense and all this. I've already done that in my income statement. So I don't want to do that again. All I'm going to do is move underneath common stock. I'm going to put my retained earnings. And since this is my very first year of operation, my retained earnings are these 650. That's my net income. So I'm going to put the total number here. And that's all we've got. Now, if this was our second year, it could get a little bit more complicated, but we'll hold off on that for a little bit. So your total stockholders' equity is 76,650. I could have done that in my head. I'm going to go ahead and put this out in the margin again. And you indent it just so you make sure you add this number and this number instead of all the little numbers. So that number plus that number, you cross your fingers because we know our total liabilities plus the stockholders' equity better equal same as this. Otherwise, I'm messed up. And if my math is right, this is definitely 750 there. So that's halfway there. 6 plus 5 is 11. Last time I checked, I had a carrier 1. I know you guys don't carry anymore, but that's what we always did. So 11750 there, 11750 there, and there's my financial statement. So that's your income statement balance sheet, and that is all there is to accounting. If you understand this, you'll be golden for the rest of the semester.